Gold's astonishing rise past the $4,000 mark signals more than a price surge. It reflects deep unease across global markets. Investors are reevaluating traditional stores of value as inflation, debt, and geopolitical risks converge. Central banks, long the stewards of monetary confidence, now appear divided on how much longer they can defend their currencies. Against this backdrop, gold has reemerged as the elemental refuge, ancient, incorruptible, and beyond the reach of policy error. The following article examines why this movement matters and what it tells us about the world economy in 2025 and beyond. Gold Shines in an Era of Low Interest Rates and Uncertainty by Aslan Adnan M.A. Sunday, 12th of October 2025. Why Gold Thrives When Rates Fall. Gold continues to glitter in an environment of falling interest rates and mounting global uncertainty. As central banks turn dovish, investors once again seek the timeless refuge of the yellow metal. Because gold pays no interest, it benefits when borrowing costs drop. Lower interest rates reduce the opportunity cost of holding gold, compared with interest-bearing assets such as bonds or savings. The weaker the returns elsewhere, the stronger gold's appeal becomes. Falling rates also tend to weaken major currencies, especially the US dollar. Since gold is priced in dollars, a softer dollar lifts its value globally, driving further demand. Safe haven in stormy times. Periods of political tension, inflationary pressure, or financial instability make investors nervous. During such times, gold is viewed as an anchor, a tangible asset immune to default or digital disruption. In recent months, gold's rally has been driven by a mix of economic anxiety and geopolitical risk. Central banks have increased their gold reserves, and retail investors are following suit, treating the metal as insurance against fiscal chaos and inflationary erosion. Record-breaking prices. In early October 2025, gold prices broke through US $3,900 per ounce for the first time ever, briefly touching $4,000 in subsequent trading. This record reflects both speculative momentum and genuine safe haven demand. The surge continues a remarkable run, roughly 49% so far in 2025 after a 27% rise in 2024, marking one of the longest and strongest rallies in modern history. Outlook for 2026. Analysts expect gold to remain firm through 2026, though its exact path will hinge on how quickly central banks pivot. If rate cuts deepen, gold could climb toward US $4,200 into $4,300, especially if inflation proves stubborn or new geopolitical shocks emerge. However, a surprise rebound in global growth or a stronger dollar could trigger a pullback. Some economists caution that gold's rally may cool if real interest rates rise again, or if investors shift back to equities. Still, most agree that the world's appetite for safe assets is unlikely to fade soon. Gold's message remains clear. In uncertain times, trust returns to the oldest currency of all, faith in something that endures. Sources: Reuters, gold sales passed $3,900 for first time on safe haven bids, 6 October 2025. Reuters, global markets, gold hits record $4,000 as investors brace for rate cuts, 8th October 2025. The Guardian, gold price tops $4,000 for first time as investors seek safe haven, 7th of October 2025. CNN, gold hits $4,000 an ounce for the first time.